This week, the main focus has not been as much on fundamentals, but on important meetings by global officials to discuss measures needed to overcome the lingering European debt crisis and give an impetus to the sluggish global growth pace. Joining me on the phone to discuss is Shane Brett, founder of Global Perspectives. Hi there, Shane. So what do you think the main focus of interest will be at the G7 meetings now underway?
I think there are a number of key issues that are going to be discussed at the meeting this week. And the top two definitely are how to promote steady growth in the world economy and how to actually stabilise it. And really, a factor of that is obviously the second main issue, which is the Eurozone crisis, which is festering in the background as it has done for the last couple of years now. So they're probably the two main topics, along with other smaller issues, like, for example, the US fiscal cliff, which has been reached in a couple of months, the whole question about the strength of the Japanese currency, and also even the quite strained relationships recently between Japan and some of its major trading partners like China.
So what sort of reaction are you expecting from the market?
So the market has been quite weak this week, I think, particularly on the back of the most recent US corporate announcements that came out. So the likes of Chevron, for example, had disappointing earnings. And I think that around this meeting, I think it's reinforcing a view that the world economy is potentially slowing sharply in places. I think around the time of G7 meetings, there can often be quite a lot of volatility in the financial markets. And if there is not a satisfactory announcement in the communique that comes out of this, well, then there may be quite a mixed response across the various stock markets. If you look at the Japanese yen, for example, that's a very interesting currency at the moment. It seems to be being treated as a bit of a reserve, a refuge currency. Obviously, Japan is keen to have measures taken to reduce the strength of that currency. And if they raise that and they don't get a favourable response, or if that's pushed back on by the other G7 members, I think in actual fact that will actually strengthen the Japanese yen, because people will realise there's no appetite out there for coordinated currency market manipulation or efforts. So in actual fact, the yen could easily appreciate. The euro is probably going to soften, more so because there's so much uncertainty coming through with Spain. Obviously, people consider a bailout nearly a given now, but no one knows the timing or the details as well.
As you mentioned, the US needs to agree by the end of the year how to deal with the fiscal cliff. Do you think there will be any major indicators from this meeting, or do we have to wait until after the elections? If so, how will the global economy be affected by this?
I think it will be after the elections. I just think there is so much focus in the US at the moment on this date next month in November that even though politicians are very aware that we have an end of year fiscal cliff date, they're calling it coming up, and that really I think a lot of the attention will wait until that period between November and New Year's, when they'll have to obviously decide how they're going to address this and see if they can come to an agreement. I think that's going to be quite a nervous time for the wider world economy, because obviously potentially the impact on the US economy, if they don't come to an agreement by way of budget cuts, could be substantially affecting its future growth.
The IMF issued a rather gloomy outlook on global growth moving forward. Do you think this has put a damper on the meetings in any way?
I do, actually, because I think historically, if you look at some of the other meetings that have taken place over the last couple of years, there was certainly crises taking place in various parts of the world economy, like in the Eurozone or slowing US growth. But really, the emerging markets had been doing historically quite well. Obviously, the Chinese slowdown has gathered pace. There's problems in the property market there, and really its exports have come down a lot. And that's been reflected in the growth estimates that have been given recently for China's economy. So now the outlook is stagnant or mixed in all the various aspects of the world markets. So I think that will really be the driving question around this week's G7, how to reignite growth, or how certainly to stabilise the world economy.
Japan's new finance minister did say he may use a G7 to discuss the strength of the yen. He also stated the yen's one-way rise isn't reflective of Japan's economic fundamentals. Do you agree with the sentiment?
If you look at Japan's economy is completely export-driven, and so it is slowing down like the rest of the world. Its export markets are not doing well. So the strength in the Japanese yen, it's really up, I think, in the last few days, above 78, and the yen that is certainly much higher than it has in recent years. It's not a reflection of Japanese economic power. I think in actual fact it threatens Japan's recovery after last year's natural disaster. There's been a lot of mystery around this, why this has taken place. There's been speculation that a lot of it is Japanese companies companies and households bringing back Japanese yen from abroad where they had it in different currencies at higher interest rates. I don't think there's a lot of appetite at the G7 to discuss this. I think that the euro and US currencies will be delighted to have a stronger yen and a weaker local currency for themselves. So while this is a major issue for the Japanese in Asia, I don't think it's going to feature very highly on the agenda for the other G7 nations.
Shane, thank you for your perspective. That's all from Shane and myself, but keep yourself abreast of the latest market news by clicking back to DukascopyTv. Bye for now.